First of all, welcome everybody. Thanks for being here. And we're going to try to get a lot done here in the time we have together. First part of our session today is going to be very structured with a lesson. Second part will be application of that lesson in the live markets. Okay? So a couple reasons why I brought up the Aussie here. Take a look. Take a look at the 5-minute chart here. I just brought this chart up, so I haven't had a lot of time to take a look, but we may have a little supply in here. Okay? I'm just going to draw some lines here. Again, I just brought this chart up just a minute ago. I have not looked at this enough, but let me draw a little level in here. Okay. Now take a look at the chart in the lower left corner. Okay. All right. Take a look at this one. So last time we set this trade up, and again, there's a point to this. Last time we set this trade up right here in the Aussie. Can everybody see it all right? Did anybody take this trade? This short in the Aussie dollar, based off the larger time frame supply level we planned out together? Tyler, you took it? All right, great. Wonderful. Anybody else take this one? I know this kind of hit about a day or so after the session, but okay, good. So and if you remember, we set this one up together. We spent quite a bit of time looking at this one. Now we set up this supply level, which meant and that was when prices were down here. Okay. All right. And we decided to sell short here. Didn't work in the futures. Interesting. I wonder why. Usually it's the opposite. Usually it'll work in the futures and not in the Forex just because of the slippage. But interesting. Maybe the level is a little bit different. But so we determined that supply exceeded demand here. Therefore, we sold short here and bet on a downside move. Correct? Right. Well, the reason why I'm bringing this up is because what we're going to learn to do today is this exact same thing in the smaller time frames. And we're going to take a step back, okay, in the smaller time frames like this 5-minute supply area right here. Okay. Now, to do this, we're going to take a step back because there's lots of new people with us the last few weeks, and we're going to go into kind of very basic lesson mode. Okay. Yeah, the prices will always be a little different in the futures. But typically, bigger time frame levels should work out the same. But yeah. Usually, if one works and the other doesn't, it's almost always the futures working and the spot not. Okay. One more little thing here to look at. Praveen, I definitely use continuous contracts, and you want to look for levels beyond the Globex highs and lows. So be a little careful today because some platforms have rolled over into the December contracts. Okay. All right. Yeah. So MRC, and so how many people are new to the sessions and really, don't fully understand the whole supply demand thing? How many people don't fully understand the supply demand concepts that are with us? It's okay. So a number of people. Well, that's good. That's okay because today we're going to take a step back and get into lesson mode, and I think you'll really start to get it. So look at today as a Nico. On that time frame and even a bigger time frame, it's fine. But yeah, if you go to a smaller time frame, it's going to be a pretty big area. Okay, so consider today kind of a back to school. Consider today kind of a back to school day for the next 20 minutes or so, and then we're going to then we'll dive into the live markets and start to apply what we're learning. So I'll run through some of this fairly quickly. You can always send me an email, but we haven't had one of these basic lessons in quite a long time. So I think it'll benefit everybody if we really bring everybody up to speed with the whole concept and strategy. Yep, drawing the lines, we will do that, TRS. Okay? All right. Give me just a second and we'll get started with. Okay, here we go. Okay. Scott, yeah, you don't even need to consider that or worry about that in spot. There you're just looking at levels. Okay? Futures get a little trickier because of the Globex session. It's really not a big deal, but it really helps people who know what they're doing, and really hurts people that really don't know how to do that. But that's in the future, so don't worry about that with the spot. All right, folks. So the two items that we're going to focus on today, and really start to teach you how to see these things on a price chart, are number one, how to identify price levels in a market where demand exceeds supply and where supply exceeds demand. First of all, one quick step back and really focus here, because I think if you get this part, everything else really flows. Think about it. Let's say you never read a trading book before, and let's say you never heard of technical analysis or trading schools or anything. You've never heard of any of that stuff, and then you came across this thing called trading, and you say, you know what? I want to learn how to do this. Well, what would you do? You'd probably quickly come to the conclusion that the only way, you're on an island, you have no access to anybody or anything, you've just got charts and trading capabilities. What are you going to do? Think about it. Your first conclusion is going to be that the only way to make money doing this is to buy low and sell high, or sell high and buy low, right? Okay. So, I think we'll all come to that conclusion pretty easily, right? There should be sound for everybody. I think Boykie's having a little sound issue here. So that's the first conclusion you would come to. If you came to that conclusion, which is how you make money buying and selling anything, the second conclusion you would come to is, well, where do you buy and sell in the market? Well, you want to buy low and sell high. So obviously, to keep the risk low and the reward high, you're going to identify turning points, right? You're going to have to figure out where the market's going to stop falling and turn higher, where the market's going to stop rising and turn lower. Does everybody agree with me so far? We'd all come to these same two conclusions if we weren't told anything, right? Okay. If we all agree with that, then the kind of the final conclusion we would come to is, okay, to figure out where every market on the planet is going to turn, how does this all work? Where and why do prices turn in any market in any time frame? The answer is prices always turn at price levels where supply and demand are most out of balance. Would we all agree with that? If we would all agree that prices turn in markets, and every move in markets starts and ends at price levels where willing supply and willing demand are most out of balance, then the only question left is, what does that picture look like on a price chart? Okay? If you really think of it that simple, you can now completely skip the whole world of conventional technical analysis and news and all that other stuff, right? Kind of like we do here. And so that's step number one, and we're going to jump into this in just a minute, identifying what the picture of a supply and demand imbalance looks like on a price chart. Number two, we're going to focus on who is on the other side of your trade. A lot of people don't consider this, but it's one of the most important things you need to focus on. How do you know whether the person on the other side of your trade is a consistently profitable trader or a losing trader? You need to know the difference, right? What if every time you push the button to get in or out of the market, there's a consistently profitable trader on the other side of your trade? You're in trouble. Make sense? How do you know the difference? More importantly, if you cannot tell the difference between a novice trader and a professional trader on a chart, if you cannot spot the difference, guess who that novice trader might be? Right? And I say that with all the care in the world. So we're going to deal with this right now. You need to make sure that you are trading with people that have no idea what you're doing, what they're doing. All right? But we'll get into more of that in a minute. So let's dive in and start to identify these two things on a price chart. Now, the next couple pages I'm going to go through fairly quickly, and then we'll slow down a little bit. And this is mainly for people that are new to our sessions. All right? And for the veterans like Boyke and others, and some of our XLT members with us here today, the other purpose of doing this, even though I know a lot of you have heard this before and know this really well, this way everybody will be on the same page, and this will help with some of the basic questions, and we can I can move the box over here, Boyke. Is that better? I kind of try to keep it in view so that I can see if any really important questions come up. Is that better? That should be better. All right. So let's take a look. Let's start to deal with step number one first. Okay. How you doing, Jason? Let's focus on this area right here. Prices are trading sideways. Supply and demand appears to be in balance, right? Whatever market this is, whatever time frame this is, does not matter. All of a sudden, there's a drop in price. Now, a lot of you will look at this and say, "Ooh, I can't wait to learn how to predict that this is going to happen before it happens," or I can't wait to learn how to make money when prices fall when they do here. Make sure you understand that we're not going to do either of those two things. Instead, we let prices move away as they do here. Because when they do, that's when we conclude that supply exceeds demand at the origin of that drop. Okay, so in other words, the only way that we know that supply exceeds demand here or demand exceeds supply is, which way do prices move away from this level? Okay, so they drop away because of a supply and demand imbalance right here. Now, to me, I see this chart like everyone else here does, but I see it maybe a little bit different because I did not start out reading a trading book or taking lessons or anything like that. My career started on the floor of the Chicago Mercantile Exchange, now the largest exchange in the world. And I specifically started in the currencies. Okay? So what I would have big stacks of buy and sell orders in front of me from banks, institutions, hedge funds, money managers, you name it. And, I could see what a big stack of sell orders, what supply really looked like when you have the orders in front of you. I'm showing you exactly what that picture looks like on a price chart. Okay? Yeah, so good question, MRC. When we talk about the term supply and demand and the way that I'm giving it to you here, make sure you clearly understand that our definition of supply and demand is very different from the conventional definition of support and resistance. Okay, very different. I would argue that whole school of thought with technical analysis and everything and all that stuff and support resistance is extremely flawed. That's why you see so many people, losing money. But let me keep going here, and then we'll get into that in a little bit. All right. So the fact that prices drop as they do here tells us that supply exceeds demand at the origin of that drop. Okay. So what we're going to learn to do is wrap two lines around that level and carry that level forward, creating a supply zone or sell zone. Okay. This is something we go over in lots of detail in the trading room at Online Trading Academy, the Forex Trading Room, the extended learning track, the XLT I talk about sometimes. I want to give you some of it here. Down at the bottom, just the opposite is true. Prices are trading sideways, and all of a sudden there's a strong rally in price. Once this rally happens, again, that's when we could say, aha, we now know where the real willing buyers are in this market, where objectively demand exceeds supply. So once that rally happens and this becomes a demand level, Shans, that's when we draw our lines in, like you're asking there. Okay? So we wrap two lines around this level and carry this level forward, creating a demand zone or buy zone. We want to know where the real buyers are in this market. Remember the questions and premise that we started with in the beginning. Just that basic sequence of questions, right? We're answering it now. So what we started to do is identify supply and demand in this market. Now, how can I be so confident when I say demand exceeds supply there? Right? How can we be so confident? Well, because if that statement was not true and there was equilibrium here, right, wouldn't prices just keep trading sideways? See what I'm saying? Right? They would. But the fact is they couldn't, and price had to rally away. And what I'm trying to get you to understand exactly why that happens. Okay? All right. Let's take a look. Pravina, I'll try to get back to that in just a little bit, okay? I want to kind of stick to the flow here, and that way everybody will kind of be on the same page. Okay? Yeah, 1FX, I will get into that in just a moment about controlling emotions and stuff. Let's deal with step number 2 now. Okay, take a look at the screen. And again, I'll try to go really quick because I know we always kind of run time, and I want to make sure everybody gets it. Step number 2, understanding who is on the other side of your trades. Very, very important. Okay, whoops. I'm trying to get rid of this box here. Okay, so take a look at the chart. And I can make this picture bigger as well. There we go. That should be good. So we started to quantify what supply and demand looks like on the chart in a market. Okay. Now let's start to figure out, who is on the other side of our trade. We need to be able to identify the novice trader in a market. Think of it this way. Walmart, one of the biggest retailers in the world, right? Or if you're in the UK, I think it's Tesco. Is that who it is in the UK? The big retailer in the UK is Tesco, right? And then what about India? Big Bazaar, is that the big one in India? Right. I don't know all of them, and I'm sure there's big ones in Japan and everything. I don't know exactly who they are, but yeah. So what are the two things they need? How do they make so much money? These companies, right? I mean, they don't really make anything. They're just kind of the middleman between us and the product, right? So what are the two things they need to be able to master? Number one, they need to be able to master the art of buying at wholesale prices and selling at retail prices. Okay. The second thing they need to be good at is getting people to come into their store, right? Right? And those two things kind of go hand in hand. So let's deal with that step number 2 here. All right? When people come into the market, we want to know exactly who we want to sell to and buy from. And it needs to be the same group of people every single time. So take a look right here. If we focus on this area, okay, we're going to specifically focus on the buyers. Now, one thing that I learned very clearly on a trading floor is there are only two groups of traders. There's people who make money and people who lose. There's hardly anybody in between. Okay? All right? So, there you go. Trying trader. There you go. Good one. Okay, so there's people who make money and people who lose. The people who lose, right, the novice retail crowd that loses, always makes two clear mistakes. And let's look at and show you what that looks like on a chart. So the buyers here are making those two mistakes. They're buying after a rallying price, mistake number 1, right? Buying after a rallying price, not a smart thing to do. You would never do that in any other part of your life and be successful. Mistake number 2 that these buyers are making is even worse. They're buying right into a price level where supply exceeds demand. The laws of supply and demand guarantee that if you buy after a rallying price into a price level where willing supply exceeds willing demand, you're going to lose consistently. Maybe not every time, but most of the time you're going to lose. So instead of being that buyer, we want to be the seller. Okay? Prices drop as we would expect. And down at the bottom, just the opposite is true, but it's that same group of traders. Okay? If we focus on the sellers, okay, it's that same group of traders that are selling after a drop in price, mistake number 1, and selling into a price level where we already determined demand exceeds supply, mistake number 2. Okay? Now, we want to be buyers right here at this line with a protective sell stop just below the area. We'll talk more about that in just a little bit. Okay? Yeah, and you draw these line shams on anything, any time frame. But remember, we have to, I'll get into more of that in a minute. Buying right here at this black line, according to our rules, is the lowest risk, highest reward, and highest probability time to buy into this market. But here's the catch, right? The trading books, all the trading books, and everything in the world of conventional technical analysis says don't buy here. Let me explain, right? The books say, don't buy here. You don't know if there's any buyers yet. Wait for a green candle, that keyword, confirmation. Right? It's in every trading book ever written. The books say wait for confirmation of a green candle and then buy. But if we wait for confirmation here and then buy, what's now happened to our risk? Has it gone up or has it gone down? What's happened to our risk? Yeah, it's gone up. And what about our reward? Has it gone up or down? Yeah, it's gone down. Right? So that's the last thing we want to do, right? Let me okay. All right. Yeah. So, you can let everybody that reads the books buy here, but you don't want to buy there. You want to buy down here at the turn, right? Okay. Right. Now, what if I were to put any indicator or oscillator on this chart? Would they have me buying down here? Right. What if I put a moving average on here or any of those things? Are they going to have me buying right here at this line? No. The moving averages aren't even going to start turning higher till well after this green candle starts forming. Okay? So what that lagging school of thought does, which is called conventional technical analysis, What it does is guarantee that you will not take the low risk, high reward entry. Okay? They are always, all those things whether it's a chart pattern entry, or which are all breakouts, or any indicator oscillator based entry, they all lag price, right? They're all just derivatives of price. They're going to do what price has already done. So here's the big, thing you need to remember. Adding anything to your analysis that lags price, or adding anything to your decision-making process that lags price, adds risk and decreases profit margin. No thanks. Okay? You can do it if you want to, but I'm warning you not to. All right? So we started to learn how to quantify supply and demand in the market, and we started to learn who we want to sell to and buy from. If we were in Walmart training or Tesco training right now, would we be talking any different? Right? Here are retail prices. Here are wholesale prices. Here's the people we want to sell to, our retail customers. And here's the people we want to buy from. Make sense? Okay? If this was like Walmart training, we'd be having the same conversation. The big misconception that people have, especially new traders and people new to the markets, is they think how you make money buying and selling anything is somehow different from what you should be doing here. The reality is, it is no different. Has anybody ever had a career in a retail business? Anybody had a career selling anything for a living? And there's a reason why I'm asking this question. Anybody care to share? Yeah? Okay, so a few people. Here's my best piece of advice for you. When trying to figure this out, the trading and what we're doing here, okay, think about what you did for a career when you sold things, and bring that into here. I can tell you one of the biggest pizza chains, pizza, one of the biggest pizza chains in Chicago, the guy that started it, I met him many years ago, and he came to a seminar and wanted to learn how to do this. He had just sold his pizza chain to a big restaurant company, and he said, I want to do this. And I didn't know who he was. As soon as he told me who he was, and he told me about his big pizza chain, I knew it was going to be easy to teach him how to do this. I said, tell me about your business. He said, my business is all about the price of cheese. He says, I have restaurants all over, and, and pizza and all these employees and everything else. He says, but my whole business comes down to the cost of cheese. So I said, all right, what's a fair price for cheese? And I forgot what he told me, but he gave me a number. I said, all right, how much cheese are you going to buy if it's twice that average amount? He says, I'm going to buy as much as I need. I said, how much are you going to buy if that average price is cut in half? He says, I'm going to buy as much as I can and store it. Okay? As soon as he said that, I said, exactly. You already know how to do this. You're very good at this already. It's my job to show you exactly how to do that on a price chart. So just keep that in mind, and I think that'll really help you. Let's move on. Okay. So again, just real quickly here, these next few I'm only gonna spend a few seconds on, not even half a minute. But again, take a look here, right? Once we see, again, make sure you can clearly know that, be able to spot that novice trader on a chart. Someone who's buying after rallying price into a price level where supply exceeds demand. That's a novice buyer. Only a novice buyer would do that. And of course, on the downside, anybody who is selling after a drop in price and into a price level where demand exceeds supply, we want to be buyers from that seller, right? Now, there's a little more to it than this when we get into the odds enhancements, which we're not getting into today. For example, don't go and buy and sell on every 5-minute demand and supply level you find. You have to know where those are in relation to larger time frame supply and demand. It's not complicated, but I just want to make sure you understand that. Okay? Take a look at a trade that we took in T. This is going a little ways back, but I think this one is still helpful. Okay, I just took this some slides right out of the course here, just to give you kind of make sure you can start to get this. So take a look at this demand level here. Okay, now we call this a demand level for a few reasons. Okay. Now the textbooks, see this area I'm pointing to down here? The textbooks are going to call this price support, right? We would never buy against this. To us, this is not a demand level. There's two odds enhancers that would disqualify this level. Now remember, I can't go too deep into the odds enhancers here because that would not be fair to the XLT members. But we'll do plenty. This is a demand level, first and foremost, because prices could not stay here and rally away. That tells us again that demand exceeds supply here. Okay. But here's some things. Being on a trading floor, I could tell you right away what the real supply and demand equation was at every price point, right? Okay? Because I had the orders in front of me. But here we don't have the order. So even though we're going to call this a demand level, how do we know what the real supply and demand equation is there? I mean, how do we know whether it's a small imbalance or a big imbalance? Remember, the bigger the imbalance, the greater the turn in price when price revisits that level, the stronger the move away from that area, right? So we want to find price levels where supply and demand are out of balance in a big way. But so I want to give you a couple ways to help you start to assess that. There's more, but let me give you a couple of them. First of all, and we'll do it through questions. You'll get it. Take a look at this level and look at how prices rallied away. Would you say prices rallied away in strong fashion, or was that more of a weak move away from that area? Strong. I agree. Okay, I agree. So, given that this was a strong rally away from this area, what does that tell us about the supply and demand equation here? Small imbalance or big imbalance? Big imbalance, exactly. Right? Exactly. Now, let's go over another one. Take a look at how much time price spent here. Would you say price spent a lot of time or just a little time in this level? It's a little 5-minute chart of the Swiss. Just a little time, I agree. Now think about this. What do all the trading books ever written say about finding, when it comes to finding quality support and resistance levels in the textbooks? All the books say the same thing, right? They say look for areas on the chart where there was lots of trading activity, where you have many candles on your chart, and heavy volume. That's what all the trading books say, right? Well, think of it this way. At price levels where supply and demand are most out of balance, okay, are you going to get many transactions or very few transactions? What do you think? At price levels where supply and demand is most out of balance, are you going to get many transactions or very few transactions? Very few. Exactly. So, the question is, the final question is, what exactly does that picture look like on a price chart? Is it many candles on the chart, is it many candles on this chart like all the trading books say? Right? Or is it very few? It's very few. Okay? Again, I don't want to sound like I'm just beating up, all this technical analysis and stuff, but the reality is, I'm very comfortable saying it, that stuff is wrong. That's a simple way to say it. Okay? And don't take my word for it. Think the simple logic through. That's the problem. People, in my opinion, and I'm like this in other parts of life. Believe me, I am not perfect, and I've made every mistake there is out there in life. But the reality is, people don't question things. If things are written enough in enough books, or and talked about by enough people, most people just believe it. Okay, but if you really question conventional technical analysis, you'll see it's just wrong. Okay, so anyway, the fact that price spends so little time here, okay, the fact that price rallied away from this level in such strong fashion means that supply and demand is out of balance in a big way here. Therefore, when price comes back to this level, okay, now let's bring in step number 2. This is where we bought for the XLT. Who was the seller? Remember step number 2. Okay, was the seller selling after a drop in price? Yes. Were they selling into a price level where demand exceeds supply? Yes. Okay, if those two things are true, then we want to be the buyer right here at this black line with a protective sell stop just below the area. Okay, and of course we only want to buy at demand when supply is far enough away. In other words, just because we have a demand level and a supply level doesn't mean we have a trade. These two need to be far enough away from each other to offer us the proper risk-reward scenario that we're looking for. At least 2 or 3 to 1 to the first target. Make sense? Okay. Now, is every trade going to work out? No. If you're doing this right and following all the odds enhancers, I know we have some people in the XLT here. If you're doing it right and following all the odds enhancers, the majority should be fine. Okay, but not every trade's going to work, and they don't need to be. Okay, they don't need to all work. Most of them should. If you follow our pro picks, you'll see not every trade works, but plenty do, way more than the majority do. But even if they didn't, even if we were only 50-50 in our pro picks, that's our Forex picking service. Even if we were only 50-50, it would still be profitable because the profits are much bigger, 2-3 times bigger than the losses. Okay, but nevertheless, the more you get into the odds enhancers and this whole thing we're doing here, the better your batting average should be. Now, another way, okay, Rick, I'm not 100% sure about what you mean there. Maybe you could explain that just a little deeper. It sounds like you're onto something good there. I'm just not sure exactly what you mean by that. So another way to talk through this trade is this. When we bought here, we just bought at wholesale prices from people who are trained and conditioned to sell at wholesale prices. And then we sold at retail prices to people who are trained and conditioned to buy at retail prices. Make sense? Does that make sense? Okay. Now, how can I say that? Who would be trained to sell at wholesale and buy at retail? Sounds crazy, right? Well, it's not that crazy. Think of this. How is everybody on the planet taught to do this from a very young age? I'm talking grade school, then high school or middle school, then university, and it goes on and on. Then the trading books. Think about how the majority of people, for example, most people around the world buy stocks, right? Well, how is everybody taught to buy a stock? Right? That's what most people do. They buy stocks. Well, think about how you're taught to buy stock. First, we're supposed to make sure it's a good company with, strong management, a healthy balance sheet, really, really good earnings, right? The earnings have to be really good. And what about the trend of the price of the stock? Is it supposed to be in an uptrend or downtrend before we buy it? Or any market for that matter. It's supposed to be in an uptrend or a downtrend before we buy it. An uptrend, of course. I agree. We all have the same lesson. Well, when all those things are true, where do you think price is in that market? Is it ever at wholesale prices or is it at retail prices? When all those things that we've been so conditioned to do and think about from such a young age, it's almost always at or near retail prices. By definition, it can't be anywhere close to wholesale prices, right? Everybody on the planet is taught to do this backwards, right? Now think about it. Now we bought here. Let me go back to. Let me go over here. Let me just share. I'm going to pull up a trade I took this morning. Okay, not all that long ago. Hang on a second. I'll show it to you here. Looking at a 5-minute chart of the S&P here. All right, great. So I didn't take the S&P here, but I bought the Nasdaq here. Okay, and a couple other people did in the program here. You can see my messengers kind of lighting up. A couple of those people also bought here. Okay, now let me show you. I'm assuming you can see the bottom of my my desktop here. You can see my instant messengers lighting up. So we've got a few people that bought down here into this demand level. Didn't I just taught you how to identify this as demand and buy from this novice seller down here, right? Al Stock, you bought it too? Excellent. Wonderful. Good job. Okay, but so let me get back to our main point, all right? What was the trend when I bought here, when All Stock in our group here bought here? Okay? When we bought here, what was the trend? Was it up or down? It was down, right? Yeah, downtrend. Have you ever read a trading book, ever, or come across anything on the internet that said buying a downtrend? Have you ever seen that before? All right, has anybody ever seen that before? Have you ever read in a trading book buying a downtrend? No. Okay? But when you go to your favorite store and, picture this, right? You go to your favorite store, you walk in and there's a sign right there that says, "Hey, your favorite item that you came to buy that day, it's on sale for half price and there's like 3 left in the back of the store." What are you going to do? What are you going to do when you see that sign? Yeah, you're gonna buy it all, right? Exactly. Okay. Isn't that exactly what's happening right here? That's what people don't get. They're scared to push the buy button here because it's a trading market, but you go to the store and chart, maybe there's a chart of your groceries or whatever you're buying. You're going to be thrilled to buy here. You need to change that mindset. Make sense? Okay. I saw a few questions as to, why not buy at these levels here? Again, to us at Online Trading Academy, these are not demand levels. Okay. We would not call these demand levels. And, right? Again, it's learning the basic supply and demand and then learning all the odds enhancers. Once you know the odds enhancers, you know exactly why these are not demand levels. Okay? And again, that's deeper than we can go into here. And even if we could go into it, there's certainly not enough time. I mean, the XLT people, these are multiple lessons and all that. All right? Anyway, but, so again, anyway, nice buy there. I saw a few people, took that. Nice job. All right. So we'll leave that alone for right now. Okay. But again, it's the same thing. Again, we already talked about why this is demand level, but again, who was selling here? Someone was selling after a drop in price. Mistake number one, into a price level where demand exceeds supply. Mistake number two. So again, just going over the strategy and then applying the strategy. So let's get back to the lesson here. Let's see. Yeah, Alstock, good point. Yeah, in the industry, if you go show, there you go. If you go show the average person this picture that you're buying here, what do you get accused of? Oh, you're catching a falling knife, standing in front of a freight train. There's a whole list of things. You actually have to call this, some people will actually call you what's it called? I don't know why the word is escaping me at the moment. A contrarian. A contrarian, right? Yeah, contrarian. But the only reason why you're called a contrarian is because most people are doing this wrong. Does that make sense? And again, I'm not trying to pick on anybody or anything like that. I'm really just coming at you hard with a reality that I think can really, change the way you think. It's such an easy fix, and it's something that's right in front of everybody's face, but most people don't see it. Okay, let me just do something right here, and then we're going to get back to the lesson real quick. Want to make sure we're not going to run out. We're still fine on time, but there's my email address, sseiden@tradingacademy.com. Okay, I'm going to type it in again a little bit. I think because it seems like people are really kind of getting this, what we'll do is we'll just continue on with the lesson. If we run out of time, we'll make sure that the next session, we'll have time to look at a chart or two. We'll make sure the next session is all application. Okay, Nico, there you go. Did you take that trade too, buddy? All right, let's keep going with the lesson. Two pictures of demand. Take a look. There's only two pictures that can represent a price level where demand exceeds supply. It's the drop, base, and rally, or the rally, base, and rally. The one on the left, picture on the left, has a benefit. The benefit and advantage here is buying against these is going to make sure that you're trading far out on the supply-demand curve, which is always a good thing. Okay, you have to make sure you're taking the first pullback into this one, or it's not high probability. The rally-based rally, the advantage here is this is typically what you're going to be buying against in an uptrend. Make sense? In strong uptrends, you're not going to pull back to this guy, but you will pull back to this. Okay? All right? Major trend changes on larger time frames are going to happen against this one on the left, not the one on the right. Make sense? Okay. Again, I'm trying to give you a lot of information in a short period of time here. But again, the main thing that you need to really hang on to is the fact that how you make money buying and selling anything is exactly what you need to be doing here. It's not that difficult. Don't let the industry, trick you into thinking it is. All right. And again, that's not to make the trading. I'm not trying to make this trading sound easy. I'm just trying to clear up all the misinformation for you. So the action, once you see this picture that represents a price level where demand exceeds supply, we want to be buying the first pullback. Okay? And again, there has to be a profit margin with this. It has to be the first pullback. It has to be a quality demand level. We'll get there with the odds enhancers. All right? Okay. Let's real quickly go over this one here. Okay. Once you see this picture, two pictures of supply. Rally, base, drop, and drop, base, drop. The advantage of the one on the left is going to offer you entries far out on the supply-demand curve. Remember, when you're entering positions far out on the supply-demand curve, the odds are more stacked in your favor. Over here, drop, base, drop. Okay, this one is going to help you get into downtrends. Okay, when you're in a downtrending market, you want to be shorting against this. Okay, or this one on the left, but you're going to get more against this one on the right. Okay. However, the cautionary note with the one on the right is that you're typically not trading far out on the curve, where in the one on the left you are. Okay. That market looks like the S&P went up to 1188.50. I just got a text message from someone who took it down there. All right, nice job. So, good question there. Sorry, missed that. Trine Trader. Yeah, that S&P one was the one on the right. Okay, the demand level on the right, rally-based rally. So take a look here. Once you see this picture that represents more supply than demand, right, rally-based drop, consider shorting a pullback into that area. Make sense? Okay. Yeah, Praveen, I definitely will. Please resend it. But my goal over the weekend is to get my inbox completely cleaned out. So if you have an email, and I have gotten back to most emails, but if I haven't responded to one, I apologize for that. Please copy, paste, and resend, and I will certainly get back to it. Okay. All right. And so I think we're good here. And take a look. I just want to, Okay, and again, so take a look at a picture here, kind of in summary. Our two pictures that represent demand, our two pictures that represent supply, and the action we want to take at both of those areas. All right? Okay. Okay, let's take a look. Yeah, in a trending market, yeah, you definitely want to focus on 2 and 4. Absolutely. Okay. And yeah, the 1 and 3 are great at the right time. Okay. Just like 2 and 4 could be trouble at the wrong time. But again, it's a little bit deeper. It's those odds enhancers. All right. So with that, let me get back to this. Okay. Let's get back to the live market here for a moment. And hopefully this is helpful. Put my email address in there one more time. Feel free to send an email. I will be on email this weekend. Okay. Yeah, so let's look at how we draw our lines, and let's take a look at let's move over to a Forex market. Now remember, there wasn't a whole lot going on in the euro, so let's try the yen. See if there's anything going on in the yen. Let's stick with let's see. All right, let's try that pound. Yeah, I have not looked at the pound at all today, so I have no idea what I'm going to find here. But let's take a look. And again, next session that I do here at FX Street, we'll make sure it's 90% application based, where today was lesson based, and I tried to really come at you with the very, hardcore, basic strategy information. Next session will be strategy. Okay? All right, we're looking at euro. I'm sorry, pound. Okay, let's see. Trader, was that off a level? Okay. Yeah, OneFX, this can certainly be used with tick charts. Okay, good. Let's take a look. Yeah, I don't see a whole lot going on here in the pound at the moment. So let me go to one more market. So is this the one? Is this the one? The daily level? This into this? I think we're right. Is that the one you took? 500. You made about 500. You said on this 500 pips. This has got to be that one. Let's take a look. Let me show you. I just want to show you how we draw these lines in on a trade that was taken here. Let me draw the lines in, and then I will go over how this was done. So if you want to just kind of quickly type what you did here, your entry and kind of wind all that. It could be short. That'd be great. And how many pips you made on it? That'd be fantastic. That way people can see that people in here are also doing this. But nice job here. So let me go over exactly why I drew the lines where I did. Okay. Yeah, Scott, but this is not just any area. Remember, this has to have the odds enhancers in play. Okay. Praveen, nice job. You just took it a minute or two ago, right? I saw looks like the S&P hit a little supply, so you took the Russell? Okay. So yeah, this would be the rally-based drop supply. I can blow the chart up a little bit more there. Hopefully that's better. The bottom line is drawn snug up against the candle bodies. Notice I cut off that bottom wick. Okay. There's a reason why. The reason why I cut off this bottom wick and put the line snug up against the candle bodies is because we want to make sure that we're selling short to these buyers who are buying after rallying price and right into the meat of the supply. Okay, right into the meat of the supply. Okay, versus now I could put my line down here at the bottom of this wick, and it's still a good entry. But here's the thing, and really focus on this. Who would you rather sell to? Think about the buyer on the other side of your short. Would you rather sell to the buyer who's buying here, or would you rather sell to the buyer who's buying here? Who's making the bigger mistake? Okay? All right? Makes sense? This buyer up here is buying right into the meat of that supply. The top line, we put at the high price in the base, which here was 143.78, and we put our stop just a few pips above that. I would say no more than 5 pips above that. Okay? So the bottom line, putting it here, ensures that we're selling to, the right, selling to the right buyer, that novice buyer, putting our top line here at the high price in the base and our stop just above that gives us the best chance in the trade. Make sense? Okay. All right. All right, sounds good. Excellent, excellent, trader. Great to hear that. Hopefully, glad this is helpful. That's the whole goal. All right. So there's my email address again, sseiden@tradingacademy.com. Colin, no, we would never do that, and I'll explain more why next time. So be careful with those. sseiden@tradingacademy.com. Send me an email if you want any more information on the XLT or all this stuff we take so much deeper in the classes. Again, I never try to. I'm not trying to. I'm just we take this a lot deeper, and we try to go as deep as we can at FX Street. Make sure you look at all the recordings. But send me an email if you have any questions. Happy to help. And hopefully this is really helpful. And thanks, and really thanks for trusting us with your, financial education. Believe me, we understand how important that is, and it's a huge responsibility that we do not take lightly. So anyway, have a great day, everybody. I know we're out of time. I talked fast today because I knew an hour is never enough, and we'll see you soon. We'll see you next time. All right, have a great day, everybody.